Good afternoon, everyone. My name is Nicolas Girod. I work for ClearBlue Markets. Thanks a lot for the invitation today, and Katie, thanks for the introduction. I'll go more into the numbers of carbon markets, which markets are more liquid, which ones are interesting for investors, and a bit more details on why it's interesting for investors. A bit more on ClearBlue Markets. We started this company 4 years ago, and we are based in Toronto in Canada as well. But before that, we've worked for 15 years in the European carbon market. Myself, I traded for the second largest emitter in the carbon market, emitting roughly 5% of the emissions in the EU market. And that has given us a lot of experience. And for the past 4 years, we've been working a lot with industrials such as steel companies, cement companies, to help them optimize their position and understand the regulatory environment in general. These are some of the markets we're working on in North America and in Europe mainly. And we're also looking at these emerging markets such as Mexico, Colombia, and China. So what do we do? Compliance strategies, a lot of market research, price forecast, and helping our clients executing in the market. So really about helping them understanding what they're doing, because a lot of these companies, their core business is not carbon markets, and we're helping them with that, essentially. So that's back on the map that Katie just showed us. There is currently 20 jurisdictions where you have ETSs, so emission trading systems. You do have other jurisdictions with carbon taxes and some hybrid type of systems. Another 6 jurisdictions are going to start ETSs. The ones that are very important coming up are China, as Katie mentioned, and Mexico. So coming back on the numbers, China, just with the power sector, would be twice larger than the EU market, so that's going to be a very large market. Mexico will be actually larger than the California market as well, so it's going to add a lot of new emissions in this type of systems. So that's something to look at. And where is the experience coming from? It comes mainly from Europe, Alberta, and California. There's a lot of good experience, but there's a lot of learning that still needs to be done in all of these jurisdictions. That's a bit more on the trend. So as Katie mentioned, the first real system was the EU ETS in 2005. And since then, we've seen really like an increasing trend in jurisdictions or emissions being covered by those systems. And next year with China and Mexico, we expect 14% of the global emissions to be included in these systems. That's 14%, and that compares to 20% of global emissions that are covered by either ETSs or other type of carbon taxes. So it's increasing, it's here to stay, and in the coming years, yeah, there'll be a lot more interest in this type of markets. In terms of size of those markets, I've got some numbers here that came from Refinitiv. In 2018, the total volume traded was 2.1 billion allowances, and it has increased 45% compared to the previous year. And the reason for that mainly is the California market and the EU market, where we have seen prices increasing and the volume increasing as well. What has happened there, there's been a lot of regulatory changes in those markets. There's been a lot of oversupply in the past few years. Something that I will mention later on as well is that cap and trade systems are learning as they go how to become better. And as it goes in the next few years, we'll see that the caps are reducing, we'll see more activity, and they're becoming more and more interesting. So based on the latest trading in those markets, these are exchange-traded futures. We see that the value in the European system is the largest, around $150 billion. You then have the WCI market, which is California and Quebec, which is roughly $13 billion, and the REGI market that Katie mentioned on the East Coast, the power sector, $1.3 billion. So these are like traded markets, exchange future traded. You also have a lot of OTC transactions that are not taken into account here. So now I'll go and dig into the numbers and go into the ETS system. Some key facts on the ETS. So you have 30 countries that are currently covered. The value again, $150 billion roughly, 12,000 installation. So there's 12,000 actual installation that need to comply on a yearly basis. And how did it work? It worked by phases. The first phase was a pilot phase between 2005 and 2007. You then had the second phase, and there's been a lot of changes and a lot of learning again as these phases went through. And the last thing as well is sectors. So like we started with industrial sectors, then the power sector was included, and in 2012 they also included some of the aviation sector, so the intra-EU flights, because they were not covered, and they didn't cover the extra EU flights due to the ICAO and this aviation system that Katie mentioned. So that's the different phases. Phase one, trial phase. What was interesting there is that there wasn't any verified data. The data in this market is very important to know what the emissions, actual emissions are. And what we saw then is that people tended to like overestimate the emissions, and at the end of the market, there were too many allowances and prices ended up at zero. And the reason for that was that you couldn't bank those allowances to future phases. So we saw prices going, starting very high and finishing very low. I'll show you the charts later. You then had the phase two, where you saw more players participating, but what was also interesting here is that there was a financial crisis and we saw a huge amount of over-allocation starting to build up in this system. Phase three, the regulators started to try to fix this issue. We started seeing some things like the backloading, where some of the allowances were removed from the market. And phase four, finally, that's starting in 2021. Again, there's issues with over-allocation, and there's been an introduction of a new tool called the MSR, Market Stability Reserve, that will remove a lot of allowances, and I'll show you what happened to prices in the past few years. So that's coming back to phase one. I've highlighted some of the price movements here. And what can impact those prices. So you do have the fundamentals, so the actual emissions, economic activity from industrials, the power mix, so is there more coal or more gas in the power mix? But you also have some regulatory events that can really increase the volatility. So for example, here you see this big drop in prices in 2005. I mentioned before 2005, there were no verified emissions. 2005, for the first time, we saw verified emissions. All the emissions tended to be overestimated, and we saw a big drop in prices. And then as the market continued, there was an overallocation, and prices finished roughly close to zero. The reason for that, again, is that at the end of this period, there was no more value to those allowances, and therefore, the value finished at zero. So now if you look at the next phase, so that's phase two, phase three, and phase four starting, we have seen high prices at the start of the system, and that's something you could see, or you see sometimes in those markets. Why? Because you see all these utilities coming into the market to hedge their short positions. But then, as I mentioned, financial crisis hit, and the fact that the caps in these cap and trade systems are fixed wasn't able to deal with this financial crisis and the fact that industry is starting emitting less and less. So what happened at that point? The industry saw this overallocation as a way of monetizing these allowances, and there was a lot of selling pressure at that point. Some other events, Merkel, for example, with Fukushima, that decided to stop the nuclear plants. The market expected to see more coal burn and more gas burn, and we saw prices go up. That actually didn't have that much of an impact because we saw more renewable coming into the market. And then 2013, again, we started seeing a change in the way the allowances were given. So allowances are currently given either for free to industrials to protect them against delocalization risk, or they can be sold in auctions. And so in 2013, they started selling more and more of those allowances into the market, and that has had a bearish pressure on prices. And we saw prices going as low at 2.7 euros. Why didn't it drop to zero? Because there was always an option value to it, thinking that you could use them for future years. So it stayed at around 2-3 euros, and then the regulator acted into the market and decided that prices were too low, there was no incentive to reduce emissions, and they implemented what was called the backloading. So what they did there is remove allowances from the auction and decide to backload them in future years, and that has had an impact, and you saw prices started increasing. That wasn't enough, however, and we then, 2016-17, they started discussing about the MSR. I'll go more into the detail of the MSR a bit later, but essentially, again, there's too many allowances in this market. The government basically decides that they want to have higher prices, and they implemented something to remove allowances from the market and to tighten the market. And the impact on prices was pretty spectacular, because we saw prices increasing by 400% in 2017-18. And you see now this very high volatility in prices. Several reasons. This MSR actually started now in 2019, so they started actually to remove allowances in 2019. And you've had other risks like the Brexit risk, which has increased volatility. So just explaining you more on the fundamentals and the MSR, the Market Stability Reserve. What you see here in blue is the actual over-allocation in this market. So they call that the total number of allowances in circulation. It's essentially how many allowances are given for free, how many are sold, and what the actual emissions are. And that's how many allowances there is in this market of oversupply. And what they will do with this MSR is look at this total number of allowances and start removing 24% of this over-allocation in the auction. And so what you see here in 2019, 2020, and 2021 is that roughly a total of 1 billion allowances out of the 1.6 will be removed from the market. That's really because of the way this MSR works, and they want to tighten the market. So 2019 to 21, you can expect to have very tight fundamentals and the market to continue to go up. After that, you'll see other drivers that start kicking in, such as the fact that, for example, the Germans want to close their coal plants. So you may see emission reduce, but at the moment, for sure, the trend is very clear, and prices are going up. Something also that is very interesting about the MSR is that there's a bit of a lag between when they remove the allowances in the market and when actually they calculate the over-allocation. So you may have a lag of 1 or 2 years where they calculate how many allocation they were in the market 2 years ago, and they actually remove them 2 years later. So you may have these timing impacts as well in these markets that might be interesting from an investment point of view for investors. So that's some of the lessons learned in the EU market. Something very important for the industry is that they need to lobby for the free allowances. So again, here I mentioned the leakage risk. The leakage risk is really the risk for an industry of having a carbon cost that is too high and that becomes uncompetitive compared to other jurisdictions where there's no carbon price. And that's the reason why they get free allowances. So there's all a play here where you want to make sure that you're protected against this risk. Some of the obvious ones as well is that you need to verify your emissions, you need to surrender those allowances. A lot of companies still forget to do that because, again, it's not their business. Their business is to produce cement or steel. Their business is not carbon markets. You do have some missing financing opportunities because, again, allowances are an asset, a financial asset, that are sitting on the balance sheet of these industrials, and some of them actually like to sell those. So like that's an example during the crisis. There was a lot of over-allocation, but also the fact that they have a value and they're sitting on the balance sheet. A lot of industrials decided to sell those allowances, and they still do it. So a lot of industrials actually don't keep length or too many allowances because they like to monetize those allowances. And there's a lot of missed opportunity because of that as well. And something I'll mention as well is that there is in this system some flexibility mechanisms where you can buy offsets, and offsets or emission reduction outside of the scheme. So for example, in the forestry land use, where you can use those offsets to comply with your emission targets. So again, you can reduce your cost by using those offsets, and a lot of companies tend to forget about it and not use the full quota of offsets. There's also a lot of rules. So if you compare carbon to oil market or the gas market, it's a regulatory-driven market, and there's a lot of different rules to follow. It's not only about the actual commodity, but what are the rules like essentially around this market. We've also had some interesting examples. For example, with Holcim, so there's been stolen allowances as well, hacked allowances, so that's something as well that is interesting because what happened in this case is that these allowances ended up in a Scottish Power account. They were bought in good faith, and in this case, the court decided that it was Holcim fault, and so they lost a lot of money with that. Not centralizing, that's also an example for industrials where they have several plants. They normally, industrials don't like to trade against each other, so they normally tend to go to the market, and one plant might be buying, another one might be selling, and you might see a broker in the middle. So there's a lot of inefficiencies due to the fact that those industrials are not really traders. They're like kind of passive in these markets. They just need to buy those allowances. It's compliance, and that's what it is for them. And finally, a last example here on the VAT fraud, that's something that we have seen a few years back. It's been solved, but that has been a big issue like for past few years, where some of those allowances, we saw carousel tax fraud type of scheme. So that's what I had on my side. I think to conclude really about carbon markets, you need to think about it as an actual commodity with fundamentals, supply and demand. But on top of that, you need to also think about the regulatory environment. And finally, also about the behavior of players. So like, because the behavior of players, unlike in a lot of financial markets, can be very like predictable, essentially. So that's the three main things I would conclude with here. So on that, I'll pass it on to Lenny. And Lenny will start talking more about the North American market and look at it from an investor point of view. Thank you.